we are tracking. Let's move on. We've been talking about the rise in gold prices. ICRA in its latest report says that organized gold loans are expected to reach the 15 trillion mark. This is by March 2026 itself. M Karthik, who's the Senior Vice President and Co-Group Head Financial Sector Ratings, ICRA, is joining us now to take a few questions and understand what the outlook would be going forward as well. Thank you so much for joining us, Mr. Karthik. And, you know, everyone is just talking about the rise that we're seeing in gold prices. What is your take? Gold has already rallied 40% this year, and we've already seen rise in gold loans as well on the back of that. Is it fair to assume that this momentum will continue? What kind of growth are you looking at in this fiscal and the next one as well?
Good morning. Gold prices have been on the rise, and that's been the key reason for the gold loan growth, especially in the last 2 financial years. Our previous estimate, when we came out in September of 2024, we expected the organized gold loan market to reach the 15 trillion mark sometime in FY27. We see that happening in this financial year itself, a year ahead of what we had previously anticipated. A key reason is the gold prices hike. We expect the growth rates to remain very strong. We would see that we ended the last financial year about 12 lakh crore, close to about 12 lakh crore kind of an AUM, the organized gold loan market. When we say the organized gold loan market, it's essentially contributed by banks and the NBFCs. Banks account for the major share. And both these participants in this segment are likely to see a very strong growth. And overall, they will hit a 15 trillion mark this year and an 18 trillion mark next financial year. So that's our outlook on the sector gold loan space. Yeah.
Hi, morning. What if gold prices correct from here on? Or they stop, just throwing out that scenario and laying it out in front of you, Karthik. Then is there a risk that, some asset quality concerns come to the floor because of the kind of rush that we've seen towards gold loans?
Historically, gold prices have corrected in the past. We have seen instances in 2008-9 where the correction was close to about 25%. We saw close to a 20% correction in 12-13 and close to about 15% correction very recently. That was in 22-23. So gold price correction is something that is a risk. But most of these entities do work with a very, very comfortable LTV, which is a loan to value. And this is typically about 65-66%. And it's not changed significantly over the last many years, notwithstanding the gold price increase. So even if there is a correction, the recovery would be good enough. We would not, maybe the headline numbers could go up, but the ultimate credit losses for these players in the gold loan space will not be very high.
Got it. Karthik, is the average loan ticket size increasing? If there are any numbers to that, because maybe the volumes are higher, or it's what is it driven by? If we talk about the tonnage, the growth is just 1.7%, right? Is it also seen in the ticket size becoming bigger?
Absolutely. So we have not seen a tonnage growth. We have assessed, the NBFC space for this, and we have looked at the top 4-5 players. And it's a very concentrated business at this point in time. Close to about 80% of the NBFC AUM is contributed by 4 large players. And an assessment of these players indicates that, the tonnage growth has been quite low, which means that the price or the average ticket size have literally doubled between 2021 to 2025. And apart from ticket size, we also see that the number of loans that the borrowers take have also gone up. So currently there are about 1.5 loan per borrower, and per borrower, outstanding is close to about 1.5 lakh, which was close to about 70,000 maybe 4-5 years ago.
But what does that tell you about underlying consumer loans? So you're saying that one borrower has taken 1.5 times loans, gold loans against that same holding. Right? Because the tonnage has also come down. So, in a way, it appears that borrowers on the same gold that they own are taking larger loans. What does that indicate, going ahead?
They are eligible for a larger loan because
they're eligible for a larger loan given the value of the gold now.
Correct. So the number of borrowers have also not gone up significantly. It's been mid-single digit kind of a growth in the number of borrowers. So what you're saying is right. It's essentially the borrowers are taking more loans against the gold that they hold, the same holding. This again is stemming from the fact that other sources of funding for this target borrower segment, the unsecured loans, the microfinance loan, all these have been on a slowdown phase for at least the last 12-18 months. So that's also fueling the movement towards gold loans, which is easier to access and get, because you're just pledging the gold and the assessment is to that extent very low, which entities do at this point in time. It's significantly backed by the underlying collateral which the borrower brings to the table.
Take that point, Karthik. Thank you so much for joining us with your insights. So that's what the expert insights are when it comes to gold loans and disbursals as well there. In fact, earlier today, we spoke with two experts from the jewelry space. Let's listen into what they had to say on demand and volume trends as well.
We are feeling the higher price of the gold price from last 6 months. Even today, the gold price has been a record selling price around 11,380 rupees per gram for 22 karat jewelry. Last quarter, we have been recorded at 20% higher in the sales. So coming month is the Dhanteras and Diwali season, which Indian customers always buy jewelry, and it's a sentiment that every Indian household buy jewelry, not only as a style statement, even as the investment they buy. So we are seeing a good sentiment to buy more jewelry in coming Diwali days.
The pent-up demand, which the customers had not been buying for some time, has started now. There is panic buying also happening. There is festive season buying happening. There is also a sentimental fear which has gone into the customer. That buying is also happening. So fundamentals are all kept aside, and it's all now sentimental. And then that is this kind of buying pressure we've not been seeing for some time now. Investment bars are also been now in good demand, which is not normally, it takes the back seat in India as compared to any other country. But now you can see the investment bars also performing well.
Well, that is interesting, where the management was saying that this time the demand for gold, Sonal, was not only driven by festive season, consumer demand buying for the weddings, etc. It's also as investment.
Yeah.
So they couldn't articulate a number that what percentage constitute, but he did say that, when we spoke to the people and tried to get the end use, a lot of it is also driven by institutions and people from an investment point of view. So they too clearly are getting into the gold rush. Get into a break. On the other side, market technicals lined up with Nagaraj Shetty of HDFC Securities. Stay tuned.